What's going on, guys? So today is Friday, the market is now closed, and I want to kind of go over a couple of the biggest movers in the market right now, as well as giving an update on the channel's portfolio, just so you guys can kind of see like the progression I'm making with it and how it's performing. I started it about 2 weeks ago. It's been chugging along, and I'm going to kind of go through, what my holdings are with the portfolio, kind of what direction it's going in, and then how the movement this past week has really affected it and affected my buying strategy. Before I get into it, though, I want to ask you guys a question. Like, do you guys like these videos? Do you like me doing an update with the channel's portfolio and kind of going over, important news with stocks that I follow? If so, let me know in the comment section down below. I try to make these videos as, useful as possible to you guys. So if this isn't really cutting it and you guys want me to just only stay at the whiteboard and kind of analyze stocks, that's fine. Just let me know. And if there's any other formatting, that you guys want me to do as far as like how you want me to present this data, or, do you like the computer screen, do you like the whiteboard screen, either one, just let me know. But without further ado, let's get in the video. So pretty big week this past week for a couple of companies. So Starbucks is now up since we added it in over 16%. That's mainly due to its earnings report, phenomenal earnings report, and I'll get into that in a bit. Micron has come back from the depths and now is up 8%. So pretty impressive. Intel has been performing pretty well. One of the larger positions in the portfolio, and it's now up 6% as of this week. Surprisingly, Altria, Pepsi are doing pretty well compared to what I thought they were going to be. I expected them to just kind of be rocks and, just be dividend generators that I'd add to whenever they go on sale. But they've actually been performing pretty well, which is good. Gold's up about 1%. Nothing to complain there. British American Tobacco had a huge spike a couple of days ago, and I was kind of like giving that back. At one point, the stock was up 7% since we bought it, so that was funny. But again, I only plan on that. I plan on this being, long haul. It's very undervalued right now. I expect over the long term it can go up about 40%, and I think that its nice 6% dividend along the way will be great. Skyworks Solutions haven't really made this, a large position yet. I do plan on doing it at some point, but I just haven't gotten an extremely attractive price or certain technical indicators to really add into the position. So it's about flat. NVIDIA, I got into NVIDIA a little bit too early. I've been adding up my position as it started to go down, and then it started to reverse, thankfully. So only down a little bit on that. Emerging markets, the past 2 days have completely, reversed any gains that I was making off of the short. So that's kind of interesting. But that is, again, focused around mitigating my risk, not necessarily making money off of it. So I'm still holding on to it, not really affecting anything like that. Just same old. Facebook is kind of doing okay. It's recovering a bit. I did want to add shares to it after its earnings report, but honestly, the earnings weren't a blowout, and and there wasn't a major sell-off, so I'm not really adding any Facebook shares right now. I still think they can go lower, and I still think I can get a better position with it, but, if it doesn't go any lower from here on out, I'm happy with the position size I have. And Nintendo, Nintendo's still kind of going around. The Direct that they had talking about their newest game with Smash Brothers, had mixed reviews. People are pretty positive about it, but people were expecting a lot of leaked characters to be in it that aren't, so that's a bit, wish-washy. But I still think that they're going to be able to destroy this holiday season. So that's about it. I haven't added any new position yet into the portfolio, although I might after today because of some erratic price movement with Apple. I may or may not be adding Apple into the portfolio. So let's kind of run through the big stocks and big movers. So Starbucks, I'll be doing a full video on their earnings, if you guys want. You guys know that I'm a Starbucks shareholder in my own personal portfolio and in the channel's portfolio. So I loved the earnings report. Pretty much everything that I wanted to get executed was executed. Sales growth was back in China. The US had better growth than expected. And, they're really focusing now on drive-thrus, which I think is, especially living here in New England, where the majority of the Starbucks stores don't have drive-thrus here. 80% of their new stores all have drive-thrus, and they're seeing that is one of their biggest growth drivers. And so I'm extremely happy about that as a consumer and as a shareholder. So I definitely think the company is executing well. The positioning that the management's doing and the management team that was kind of shuffled around when people are leaving, I definitely think that everything's kind of, executing properly here for Starbucks. Their Nestle deal gave them a large amount of cash. Their balance sheet is, and I'll get into it in the video when I do a full breakdown of their earnings report. Their balance sheet could definitely be better, but I definitely do think it is still strong. Their current assets right now, I believe, are over all of their liability, or all of their the current liabilities and their long-term debt. Not by much, but I think it's about even, maybe a little bit more assets. I'll have to look at the numbers again. But it's definitely strong. I do think that there's going to be a very big contraction with Starbucks, assuming we hit a recession. But I do think Starbucks, if we continue in this bull market, it's definitely continued to be a very strong performer. And I definitely think it's a good company I can still keep on for 10 years plus down the line. So very happy with what was going on. Even look at the U.S. Americans. The same stores in the U.S. grew about 4%, and that's kind of impressive. They were kind of stagnating their growth over the past couple of years. That's why the stock has gone pretty much nowhere. But now it seems that at least in the U.S., growth has kind of reignited. They gave good guidance on their China, and China is now on the higher end of their lower estimates that they were giving, and that's even without the introduction of the Alibaba partnership. So pretty good news with Starbucks. I definitely think Starbucks will be executing well. And it's also interesting that the sales in China are still strong, and they're actually getting better. A lot of that has to do with their rapid expansion in China, but it also pokes some holes in people thinking that the Chinese economy, at least on the end consumer level, everybody thinks that they're in a recession. Everybody thinks that they're going to be saving all their money and not spending more money. And obviously, you and I both know that Starbucks is more of a luxury type of coffee, and if their sales growth are going pretty well, I believe that the consumer confidence level in China is still pretty good. So that's something really interesting to think about, and what might make me a little bit more bullish to starting my positions now into companies like, say, Alibaba and other Chinese giants, because I definitely think that the Chinese market is kind of consolidating now. But it'll be interesting over the next couple of weeks to see that. Big news with Micron. So the U.S. has pretty much done what should have happened months ago. I know that a lot of you knew about me freaking out about patent issues with Micron, with UMC in China, and then pretty much stealing Micron's patents and then going to the Chinese government and having Micron kicked out, at least for a certain product. And now the U.S. The Justice Department has pretty much had enough, and they have now banned the company Fujian Jinhua. Hopefully I pronounced that right. Probably not. Haven't taken Mandarin in a long time. So is now banned because they were pretty much stealing Micron's patents, and the Justice Department pretty much noticed that this was going on, pretty much walled them off and did not allow any U.S. or Chinese companies to really have. They are no longer allowed to buy products from the U.S. in order for their infrastructure. So that means that they are not going to be able to get up to rapid scale as much as they wanted to, which is great news for Micron, Samsung, and SK Hynix, because if you cannot create a fab and you don't have the technology to really ramp up your fab properly, to grow that eternally will take 2 to 3 years to really get that on track. And with us already approaching switching over to DDR5 or 3D NAND, which is kind of Micron's biggest bet for the future. And if you guys want an update on Micron, let me know, because I definitely think that Micron's kind of focusing on, say, the next 5 years. I don't think it wants to be primarily a DRAM manufacturer. I think it wants to switch to 3D NAND. But again, if you guys want, make sure to let me know in the comment section below. I can go into that. But this is really good because now Micron is already building a facility in Virginia, so they're definitely trying to isolate, all of their dependency on, say, going overseas to create all their products. So their new fab will be here. They're preventing, or the U.S. is now preventing Chinese fabs from pretty much gaining all that technology and being able to catch up to speed real quick. A lot of that's because Micron is the supplier for DRAM and other technologies for the U.S. government. So the fact that another company is trying to steal their patents is not flying well. So definitely good. And apparently that gave a lot of investor sentiment back into the stock, because the stock, I think it closed about $40 a share. It was reaching, about $34 or $33 a share this past week, and it just kind of immediately rebounded. So definitely good for my portfolio, and I'm assuming most of yours. So definitely interesting news. If you guys want, again, I can go more in depth on any of these stories, but that was just something I wanted to touch upon because Micron definitely moved because of it. And I think a lot of people are now, starting to see the optimistic side of Micron again. But the big thing that I imagine most of you guys are, curious about, and the thing that directly moved the market with how large Apple is Apple's major sell-off. So Apple at one point, I think, was down almost 8% today. And in my opinion, it was complete overreaction and did not need to happen, but did possibly open up an opportunity for non-Apple shareholders. So Apple, obviously, we all know, created the iPhone, the iPod, the iPad, pretty much every luxury tech gadget you can think of is an Apple product. And Apple is the largest company in the world, about over, I think it was a $1.2 trillion at one point company, and now it's still just about a $1 trillion company. And their earnings report was very positive, but analysts, in my opinion, were just looking for an excuse to be upset with Apple. So Apple beat on revenue, they beat on earnings per share. They slightly lowered their guidance for this holiday season. A lot of that's to do with, they didn't have a blockbuster, say, iPhone that just came out. They might be sandbagging their numbers a little bit, but the iPhone isn't selling as well as they had hoped, or at least analysts had hoped. But Apple, because it makes so much more money off of each individual iPhone sold now than it ever has before, their margins are so strong, they were able to still beat their revenue and their earnings, in the iPhone segment. And also the iPhone segment is getting less and less, Apple is becoming less and less dependent on just that one sales driver. So if you go back a couple of years, I believe at one point, Apple's revenue was 70% or so of just iPhones. But Apple as a service, the wearables and everything like that, Apple is definitely trying to diversify where it's getting all its revenue from. But that really hasn't been reflected, at least in the analyst schema, and they are still only focused on iPhone sales and iPhone unit sales particularly. And so they gave a good earnings report, definitely nothing, to be, it wasn't, say, a gangbuster, but it definitely wasn't a disappointing earnings report. Guidance could have been stronger, but again, it wasn't as if guidance was dropping off a cliff. But the main reason why Apple had this major sell-off was because Tim Cook decided to, from here on out, we're not going to give the direct iPhone unit sales. And apparently that just blew everybody's mind out of the way, and everybody was just blaming Apple for saying that, okay, things aren't going well at Apple, so now they're going to try to hide, what their sales are. They're going to try to, cover up the fact that they're not selling as many iPhones, and that the company is up to some sleazy business. And from someone who, definitely I don't know as much as I could about Apple. I know a decent amount about Apple, and to me this just makes no sense. So yes, obviously the total market share of iPhones over time is going to go down. But when you think about the market of just smartphones in general, more and more players, especially in emerging markets where China was getting a lot of its revenue from, are becoming diversified. If you look at Huawei, or Opia, however you pronounce the other Chinese phone manufacturers, they're making really good phones at a pretty cheap price. They're on Android, and they're just more compelling to people that don't have a lot of money, especially in China. So obviously, less people or less new people are going to say jump on the iPhone bandwagon. That being said, Apple doesn't really need to, if you look at Apple and you look at a company and you expect the company to, say, generate revenue, even if, Apple isn't, say, able to be, in everybody's pocket, if Apple is making more money than they've ever made before off of their current iPhones, even if they have, a slowdown in growth, or even if they have a negative growth, their revenue and their earnings could still be positive, and they could still be making a boatload of money, which they are, mind you, still the most profitable company in the world. And everybody just kind of thought that the transition of not showing the individual unit sales was too much to ask for. Mind you, I'm pretty sure almost every other product, if not every other product that Apple sells, it does not give exact units for. A lot of companies do not give exact units for. They just kind of give these are our sales. Okay, you can figure it out from there. So, Apple's not saying, it's not going to say how much money it's made. They're not going to, they're not really hiding any of the important financial information. They're just saying, don't judge us on a unit by unit basis, because depending on, the quarter, we could miss in units, but because of everything else, we could still beat in revenue, because Apple is not just a one-trick pony, or at least they're trying to make that shown they're not a one-trick pony. But a lot of people, they just didn't want to hear it, and the fact that Apple then said that, okay, well, we're just not going to do this anymore, which I think was smart for Apple. That was obviously something that the market didn't want to hear. The market's been kind of uneasy the past couple of weeks anyways, and with Apple being, the company that it is, people just didn't want to hear about it. But if you look at like just Apple as a whole right now, so Apple, it's still sitting at about a $1 trillion market cap. Its PE ratio is under 18. It is the most profitable company in the world. It's had a really fast dividend growth the past couple of years. I think it's around 20% or so for the past 5 or so years. Extremely profitable, and I think they have something like like 286 or some odd $billion in cash. So when you think about like Apple has in cash more than the majority of the S&P 500. People being upset and like cherry picking the fact that like, oh well, unit sales were off by a little bit. I don't care that you're making more money than you've ever made before. The fact that your iPhone sales is a little bit off, you don't deserve a valuation of a moderately priced company. Like if you look at the average S&P market, the PE in the S&P right now, it's sitting at about a 25 to 30, depending on what you're looking at. I don't know why they would just say that Apple would be overpriced at that point, or that it's no longer worth the valuation that's trading at. If you look at like a company like Pepsi or Coca-Cola or any other major consumer staple company that is definitely not going anywhere anytime soon. They all trade at a 20 plus PE, and that is generally because people are willing to pay a little bit higher, not necessarily for the immense growth, but because of the safety in the name. They know that the company is not going anywhere, and people apparently now think that if Apple isn't able to grow at the rate that Apple's been growing at forever, regardless of, or their units aren't able to grow, and their revenues able to stay the same growth rate, that it doesn't deserve that like safe valuation. And so I just don't get it, and I really might be starting a position. You guys know I've voiced it a lot. I do not like Apple. Their products. I do not like their Apple products. I am a Android and PC kind of guy. I like being able to take apart my gadgets and fix them and upgrade them to my heart's content, and pay cheaper amounts of money for better performance. But that does not stop the fact that the majority of people out there like Apple products, and the company's been executing really well. And I think that this is just a buying opportunity. It might be a swing trade. I could possibly go long here. But I definitely think Apple, and let me know if you guys have different thoughts on it. I definitely think Apple is a well-run company, and I think it's a company that's not going to be going I don't think it's going away ever. I think Apple will forever be the second tech titan when you look at, say, Apple and Microsoft. Those two companies I don't think are ever going to be going away. I think their moats are too strong. I think their consumer base is too strong, and I think they're in too many things at this point. So pretty interesting. And again, if you guys want me to do a full Apple review, let me know. I know a couple of you are asking me for do an analysis of it, but this video is getting pretty long, so I'm going to end it there. Portfolio is now positive. Been a great week. Cannot say of how happy I am with Starbucks. But with all that, that was just kind of my rambling and what I saw going on in the markets today. Let me know if you guys liked it. Let me know if you guys found any use out of this video, and let me know if you guys want me to change around the format at all. I'm always open to new ideas. So with that, catch you guys in the next video. Thank you guys for watching. If you've stuck around at the end of the video, make sure to like and subscribe this video. And so I'll see you guys in the next one. Peace.